All right, let's go ahead and get started. Welcome everyone to the DeFi Development Corp July 2025 Business Recap and AMA. My name is Pete Helmiston. I am the head of research and content here at DeFi Development Corp. I'll be taking DK's spot today. He is among the panel, along with Joseph and Parker from the team. We're going to be addressing some of the questions that were sent our way, as well as diving into some of the more notable developments and milestones achieved last month. This is the first of its series going forward. We're going to be hosting a monthly AMA and general business recap so we can answer questions from market participants and investors, as well as just highlight some of the more notable wins in the month prior. So just before we get started, I just want to remind everyone that today's Spaces is recorded. Of course, feel free to send us any questions that you might have. We'll do our best to answer them during this conversation. And any questions that we don't get answered today, we'll do our best to answer in the coming months. So, of course, please feel free to resubmit those at a later date as well, too. Before we begin, just a quick note. Today's conversation may include forward-looking statements. These involve risks and uncertainties that could cause actual results to differ materially. For a fuller discussion of those risks, please refer to our most recent Form 8-K filed and other filings with the SEC. We don't undertake any obligation to update these forward-looking statements. All right, now that I got that out of the way, team, let's dive headfirst into these questions. The first one that was sent our way was, why does SOL per share, or SPS, which is our North Star main performance metric, matter more than just growing your total SOL? DK, do you want to take that one away?
So I actually start with this question of why has MicroStrategy outperformed Bitcoin over the last few years by over 3x? And long story short is they're viewed as a proxy for enhanced Bitcoin exposure. Why are they viewed as a proxy for enhanced Bitcoin exposure? It's not just because they keep buying Bitcoin, but because the underlying Bitcoin per share has actually gone up pretty considerably over the last 5 years. So if you were a shareholder in MicroStrategy 5 years ago, you have more Bitcoin per share today than you did back then. I think the growth rate, Pete can correct me if I'm wrong on this, and the article he published out has grown by about 10x. So the idea here is that you get the price benefit of the underlying asset that sits in the Treasury, and you get the Bitcoin accumulation benefit. If Bitcoin per share was flat, you'd have only gotten the price. So the whole point of a crypto treasury vehicle is to give you enhanced exposure. How? By making sure shareholders have more of the underlying crypto on a per share basis over time. So in our case, we anchor to SOL per share growth. Our SOL per share is actually up over 40% in the last month. And if you look over the last 3 months, since early May, I think it's up over 100%. On a fully diluted basis, I'd actually urge you guys to look at this. It's up more than that. So it's just important to keep in mind that if you were to look at, say, our fully diluted share count over that time period, I think it's up less than 25%, but our total SOL is up over 200%. So the idea is to try to be as SOL per share accretive as possible. Now, the absolute SOL balance matters as well, and we are laser focused on that too. But it would sort of be I'm going to say a meaningless victory lap to take if we grew the absolute SOL balance, but per share SOL exposure for our shareholders went down or was flat. I think that's all I'll say on that. Joseph or Parker, I don't know if you guys would have anything to add to that.
Sure, just repeat the same stuff basically. This is the whole point of the company. Our key metric is SOL per share growth. It's the top item on the website. In service of SOL per share is like the email signature. We say it in all of our calls. The whole company is built. The incentive program for the team is focused on SOL per share growth. The whole company is built around it. That's the purpose of the company.
Yeah, I think One other point that I would make here is that if we weren't growing SOL per share, we would basically just be a SOL ETF. And so I think, in the early days when people, going back to the MicroStrategy example, when people were saying, oh, like people are just buying MicroStrategy because it's the only way to get exposure to Bitcoin. But as soon as the ETF is going to come in, MicroStrategy is going to be dead. They fundamentally did not understand MicroStrategy's business, and clearly that has not happened. In fact, MicroStrategy has been anything but dead since the ETFs came out. But, the ETFs have quite a bit of Bitcoin, but, they don't grow their Bitcoin per share. So I think in the same way, if we aren't growing SOL per share, at least faster than ETFs will be, because they'll have some staking, then we're effectively an ETF and there's no reason for us to exist. So, yeah.
It's interesting. There's actually a scenario where it might be worse than an ETF, or if you were overly dilutive, just growing the SOL balance, right? You end up on a per share basis going the other way. So,
absolutely. I mean, we have, depending on the size of the vehicles, we have higher OpEx right now than an ETF of a similar size because, you don't really need to do anything with an ETF. At some point, once we grow, the expense ratio on the ETF will become larger than our more fixed OpEx. But, for now, we have to justify our existence for sure.
Yeah, it's funny you said much earlier on when we were comparing the company to, or when potential investors were comparing the company to an ETF back in probably March. I don't remember if it was you or DK now, but one of y'all said we'd have a negative expense ratio or management expense ratio, which stuck with me. And I think has played out if we were to compare the business to an ETF.
Yeah, that's a great point. Yeah, if you blend the total SOL per share activity, it would be like we have this massively negative expense ratio because we're growing SOL per share a lot faster than an ETF.
Bullish.
Pete, back over to you.
Bullish, very bullish. Maybe not so bullish, or I guess people are saying, hey, where the bulls been? Leading us to our next question here. And again, as the author of this article, I'll shill right before I throw out the question. We do have a really good piece, I think, that came out over the weekend. It's so over, crypto treasury vehicles are dying. Talking a little bit about the MNAV compression and accordingly the price action for DFDV and some of the other crypto treasury vehicles out there. Definitely worth a read. But yeah, guys, one of the other questions we have, of course, gotten is, can you maybe comment, however you can, on kind of the stock price performance as of late? It's taken a little bit of a hit, and I know market participants would love to get some thoughts and insights on that front.
Yeah. You want to kick it off, Parker?
Yeah, let me jump in on this one.
Sure.
So, can't unfortunately really talk about price exactly, but I can talk about MNAV compression, which has kind of derivative of price. But I think what's one of the components that is at play here, and then DK and Joseph and whoever can jump in on the others. But one of the components that is at play here is saturation in the market. So, we've looked at, we've seen a bunch of deals coming to market for different treasury vehicles. And a poignant example of one was another Solana play. A guy reached out, we're just wanting to get my thoughts on, he wants to launch another Solana treasury vehicle. And so, he wanted to chat. So, I was being nice. I'm like, okay, well, what's your edge coming into market? And he was like, oh, we're going to do staking and we're going to do some DeFi stuff. And I was like, all right, well, other people are doing the same thing. And he's like, well, we're just going to launch a big round. We're just going to do it, basically. And so there was zero thought towards how to differentiate. It was, going to be on Solana. And so I think you're seeing a lot of this Me Too where people launch a vehicle and then there's some kind of pop on some of them, not all of them, but some kind of pop on some of them right out the gate. And so what you're seeing is new companies, and in some cases, these people like don't know the first thing about crypto. They're calling it like Solana coin or something, but they're, throwing up their hat, launching a new vehicle, and investors are, a lot of these deals are being done at like 1x NAV for, 1.1x, maybe 1.2. And so investors are just like, okay, well, I'm going to sell the vehicle that's at a, trading at a 2 or 3x NAV, and then I'm going to go invest in the 1.1x because fundamentally they don't understand what it takes to build a successful business here. And so the idea is that they're all the same. And so you just go sell the expensive one, buy the cheap one, right? I think what we're going to see, and we've already seen some of this, where some of these vehicles, especially on oversaturated assets, and there's a few good examples on Bitcoin where they announced, I don't want to pick on him too much, but like the Pomp deal is a good example, very high profile guy, but being done in the SPAC, they announced, it popped, it is all the way back down to the deal price now. And so I think what you're going to start to see is the market will start to value differentiation between, people who know what they're doing and know how to grow a business and grow asset per share, in a organic and inorganic, but especially organic way, versus those that cannot. And so I think right now we're kind of in this oversaturation phase where everybody's just throwing out their hat like, hey, let's just do another one. Let's do another one, do another one. But I think that's going to wane over time, and you're going to start to see more differentiation where who the market perceives as the winners will start to grow their NAV multiple. And then all the rest start to trade right around 1x. And so I like to think we're going to be we're going to be that leader on Solana, and we're certainly working, every night and day, 7 days a week to make that happen. But I think right now the market's just not appreciating the differentiation. So that's one way to put it.
Yeah, I'll chime in here, and I would encourage everyone to read the blog posts that was posted on our main account. Pete did a fantastic job writing it up and really flexing those former Kraken intelligence muscles over there. But I will reiterate again, we cannot comment on our own valuation directly, but you can think of crypto treasury vehicle stock prices as a function of price of the underlying asset, the ability for the company to keep acquiring the underlying asset as quickly as possible to increase crypto per share, and of course what the market is willing to pay. And I think Parker spoke a little bit to some of the saturation in the market compressing that last dynamic, i.e. MNAV. We obviously don't control the price of the underlying SOL, but it is worth noting since we kicked off our strategy, the equity has outperformed SOL. So I think what a lot of the maybe spirit of the question is more around the near term. I'm going to say near term price action versus Solana. And I guess what I would say is I'm reminded of that Jeff Bezos clip. I can't remember where he said this, but where he said, he was watching the price of Amazon stock go down, but he was watching his KPIs go in the opposite direction. And, I'm reminded of that because, again, to reiterate at the start of the call, our SOL per share is up over 40% in the last month. It has doubled over the last 3 months. On a fully diluted basis, we feel our fully diluted share count is in a very manageable place compared to a lot of other crypto treasury vehicles in market. But of course, you've still seen MNAV compression. I do think eventually, once a lot of the noise settles down, folks will focus on those who can keep executing, to keep growing the underlying on a per share basis. I think the team will matter a lot. Do you, for example, really know what Solana is? Are you really an advocate for the ecosystem? Or did you learn about Sol 10 minutes ago? I won't point fingers, but those are some of the thoughts that come to mind for me.
Good deal.
Yeah, maybe time is, one more thing, I think, quickly. I think time also might matter here. Like all of these, certainly the non-Bitcoin vehicles are all new, right? We did our change of control in early April to transition the Treasury strategy. and we were the first non-Bitcoin Treasury company in the U.S. So it just hasn't been that long, right? So I think we just need more time to have these businesses differentiate from each other, right? Because right now, I mean, as you write in your post, these look like they're really correlated, right? They're moving together. The MNAVs are moving together.
Yeah, and there's almost a speaking the element of oversaturation. It's not just oversaturation of vehicles; it's like oversaturation of assets. Like the number of questions we get on, like, I just don't know how to differentiate Sol versus ETH versus SUI versus Bitcoin versus, like, those are the types of questions we are actually getting from a lot of institutional investors these days, which for me, I actually think is bullish longer term, because it tells me it's still really, really early. And, I think a lot of our focus as a team is going to be really pounding the table on the story of Solana, over the next few months here.
Yeah, I think it's a great point on the differentiation of assets. Like, these are the same questions that every single newcomer to the space asks every cycle, right? Well, what's the next Bitcoin? Or why is there only one Bitcoin? And what's the new thing? Whatever. And so the fact that a whole new cadre of investors are now asking this question is mega bullish, because these people are coming into the space, they're asking the questions, they're trying to learn, and ultimately the metrics are going to, and the progress are going to be what carry the day. And these people will see, like, oh, actually there is much stronger fundamentals on Solana than, any other network from a network, DeFi perspective. Obviously, I think Bitcoin is money. I don't think Solana is money, but beyond that, I think Solana has the strongest metrics by far. So it'll take time as people do their homework, dig in, start to compare Solana versus some of the other main, DeFi networks. But I think, as we all know here, like, Solana wins on a lot of the metrics that matter.
All great answers. Yeah, I appreciate everyone on the team opining on the price action, or to the extent that they can, just to help market participants and investors make a little bit more sense of it. And I just want to echo something that I think everyone kind of alluded to in one capacity or another. It's, especially in our case, remember Solana being more of a nascent asset than relative to Bitcoin or Ethereum. It's going to be more volatile, and therefore, volatile to the downside in addition to the upside. So something to always keep in mind. Moving along here, and I'm glad that this question came up, because it comes a few hours, or we're answering it a few hours after our weekly team macro call, where we discuss, where we think the market is trending and how do we position the company accordingly. The bear market playbook. Everyone on the team is crypto veterans. We've been through at least 2 or 3 bear markets, at least. That said, guys, would love to hear your thoughts as far as how we're thinking about navigating an inevitable bear market. No one knows when it's coming, but we all know that it is going to come sooner or later. So, would love to hear some thoughts here.
You want me to pick that one up?
As the veteran of the most bear markets, I'd love to hear your thoughts, Joseph.
Sure. Yeah. So I've been working at crypto exchanges since middle of 2013, and been through a bunch of cycles. And I reference the exchanges in particular here because the exchanges get hit, very hard from business perspective in the cycle. Right. Bear market comes, the volume draws up, the revenue draws up, and there's almost inevitably layoffs, and it's very painful. There's a balance sheet management process, right, to get through this stuff and make sure these companies survive, and a lot of the companies just don't. So we've all seen this. The team here has all seen these cycles, and I think the way to navigate them is just planning. That sounds kind of simple, but if you know it's coming, and you're in a bull market, a good market, when raising capital is relatively easy, compared to the bear market where it's almost impossible, then you can just prepare. So, ever since the team here got together, I think the first model John, our CFO, put together was, how does the company survive a 80% drop in the price of sol? And, what's it look like, during that period? And we just plan around this stuff. I don't think an 80% drop is going to happen, right? But, we've been through these things. So it's just cash management, just planning. And then that continues or complicates a bit with the way these Treasury vehicles are funded. So, they're leveraged exposure to the underlying asset. And, with that leverage, there's debt. And so that has to be managed as well. So that can be from duration of the debt, like convertible debt instrument. MicroStrategies are 5 years. Our convertible debt fundraise that we did a month or so ago, so 5-year duration convertible debt instrument. And so we have to have discipline around the capital that we're willing to raise and the amount of, duration risk we want to take, and the costs that we expect to have from, the cost of servicing that debt, and also running the business in a way that's planned to sustain the business through a bear market. And we've said this a bunch of times. We think these businesses, not just Treasury businesses, but crypto businesses, and maybe more broadly, are kind of forged in bear markets. Bear markets for building is kind of a saying in the space. I agree. And all these businesses, except for MicroStrategy, were kind of born in the bull market so far. So it'll be interesting to see how it shakes out in the bear, what consolidation looks like, etc. And I can't say that I'm looking forward to it, but it sure will be an interesting time.
Yeah, I can kind of add on. I think from a practical perspective, some of the things that we can do, we can kind of, if we think the bear market is fast approaching, we can maybe pull forward some of our capital raising, because we know, we won't get another shot on goal, so let's try to get as many as we can now. And I'm not saying that we think it's imminent, but that's just an option for us. The other option is to raise or hold a little bit more cash. So we certainly want to maintain a very large exposure to Solana here, but kind of around the edges, we can kind of massage things, especially as we think about OpEx. I think MicroStrategy typically maintains about 50 million in cash. So not to say that we need to maintain 50 million in cash. That'd be a pretty large portion of our balance sheet today. But, over time, maybe we build up a little bit more of a cash balance. So we certainly can't predict the future. We don't know when the bear market's coming, when the bull market's going to end. But we can kind of make some directional guesses and make some small bets such that if we're right, then we look better than everybody else. And if we're wrong, it doesn't really hurt the business too much. So that's kind of how we think about it. I think, not just the goal isn't to just, survive a bear market, but I think it's also really to thrive in the bear market. So to the extent that we can set the business up, we can create sources of revenue that are non-fundraising dependent. So sources of SOL per share growth, organic sources of SOL per share growth. That also helps us in the bear market, and that will allow us to opportunistically take advantage of potential distress situations. So you could think of, all the investors in the last cycle who were able to get into the giant locked SOL deal when FTX blew up, and these guys were buying SOL at a 40% discount to the spot price of SOL. So when SOL dipped down, below 20, these guys were getting SOL at like, $10 and lower, with the price moving around. So that was a great opportunity for these guys who had some dry powder, or maybe they just had SOL, liquid SOL, and they swapped it out. But, if there are other opportunities like that, we want to be ready to take advantage of them because, we believe that, as Joseph mentioned, the winners of this, the Treasury strategy game will not be determined in the bull market, but will be determined in the bear market. And so if we can set ourselves up really well to take advantage of some of these opportunities, if they present themselves in the next bear market, then I think that just serves as a slingshot for the next bull market to really, go after the 100 billion MicroStrategy market cap and beyond. So I think, that's just a little bit how we think about it as well.
I don't really have anything to add to this other than a pure anecdote, which is one of the things that impressed me most about working with Joseph during my time at Kraken. We were heavily involved with the annual planning process. Was Joseph's ability to be bullish when everyone was bearish and vice versa. Not just for the sake of it, right? Like obviously if trends were set to continue, it was, we planned accordingly. But I guess that's why they call you Solana Jesus, Joseph. You're also a prophet.
All right. Thanks, TK.
Like that's enough of that metaphor. I hate that.
You can tell Joseph really, really loves the title, but he didn't have a choice. He was born into it, so it is what it is.
We'll send swag to whoever makes the best Solana Jesus meme over the course of the next few days.
Yes.
Just tag us.
One of my friends sent me a picture of, I think it's one of y'all, from behind with one of those Solana Jesus shirts on the other day. It was very embarrassing.
Soon a global international brand, in my opinion. With that said, that leads me to my next question here. July 17th, we did announce the DFDV Treasury accelerator, which is a strategic franchise model that's basically built to help public SOL Treasury vehicles worldwide. One of the questions we got was, when do we plan on announcing a foreign treasury or non-U.S. entity? DK, do you want to run with that one first?
Yeah, I'm going to give the IR buzzkill answer here. There's nothing to announce yet. Stay tuned. We're excited about this, but really cannot comment on timing given the sensitivity around this. And I will leave it to either Joseph or Parker if they would like to talk about how bullish they are on this. But aside from that, that's all I'm going to say.
Yeah, I can jump in there.
Yeah,
please. Okay, all right. I'm super excited here on this one. Been spending a lot of time on this one. We all have. And I think there's a big opportunity to replicate what we're doing internationally, and then also to replicate what we're doing on different Solana-based token projects or assets. Because ultimately what we're doing is making Solana accessible to more people. But, our stock is not tradable by a lot of people in different parts of the world, or maybe they don't like our kind of vibes ultimately, like if you're a British guy, maybe you want to hear a British CEO talking to you, or if you're a European guy or you're a Japanese guy or, any of these countries, you probably want people that kind of sound like you, maybe look like you a little bit, telling the story in a way that you can understand, helping, you to get into Solana in your own way. And so if we can kind of be part of helping bring these things about, I think it just overall helps accomplish the mission more of what we're trying to do, which is bridging TradFi and DeFi. So I'm super excited about this area, spending, like I said, a lot of time on it. And I know we've maybe gotten a little bit of reputation for announcing partnerships and announcing things, and then, it taking a little while to come about, the actual meat behind the announcement. But this is one that we're very much focused on, and, hopefully there'll be some, I guarantee there will be some cool announcements coming out in the future. Can't say when though.
Cool. Thanks for the buzzkill answer, guys. No, kidding. Yes, I too am super excited for this. I think this is one of the more exciting things that we're working on. And I'll I'll leave it at that. So moving on to the next question here, man, as someone who scrolls crypto Twitter a lot, maybe more than I'd like to admit, particularly the crypto treasury vehicles, you often see a lot of people kind of screaming, about dilution, issuing new shares, that being bad for the stock price, the company. I think that there's just a lot of nuances behind, not what we're doing, but everyone in the crypto treasury vehicle, vertical, if you will. So with that said, I think this is a really, really good question for us to answer, and maybe it can help clear up some confusion for audience members. Team, how do we avoid destructive dilution? You guys keep diluting with the equity line of credit. Why?
All right, let me start with this one, and then Parker, I'd like you to chime in with a little bit of how we think about the right to MNAV premiums, if you will. So we only run the equity line of credit at a premium that makes sense to grow underlying crypto per share. Again, I think there is, as Pete mentioned, a perception that running the ELOC is just bad because shares going up equals bad, right? But the business, again, exists to grow crypto per share. And, when you trade at, say, an MNAV premium of 10, or, 2 or 5, whatever it is, issuing equity to buy more SOL means you're able to basically buy SOL at a discount, if you will. So let me walk through an example. Let's assume you have one SOL on some hypothetical balance sheet and 10 shares of a company, right? So 1 divided by 10, you've got 0.1 SOL per share. Now let's suppose this stock trades at $16 per share. 10 shares times $16. I'm just going to, for simplicity's sake, assume no other cash, debt, or anything else in the cap structure here. Like with 10 shares, your market cap is $160. So now let's say you issue 10 shares. All right. You get $1,600. You buy 10 more SOL. So you go from 1 SOL on the balance sheet to 11 SOL. You go from 10 shares to 20 shares. 11 divided by 20, 0.55 SOL per share, and you started with 0.1 SOL per share. That is a 5.5x increase in SOL per share. And this is, I think, one of the toughest concepts I find in chatting with a lot of investors that they just can't wrap their brains around, is when you do issue equity at this MNAV premium, the dilution, I put in quotation marks, is actually accretive. And again, given the whole business exists to grow the underlying crypto per share, when you're doing this above 1x multiple to net asset value, it is actually accretive to the underlying crypto per share, in our case, SOL per share. We have not given explicit guidelines now on exactly when we would be more or less aggressive on the ELOG. You can imagine as we get closer to 1x, we sort of lay off. But Parker, do you maybe want to talk a little bit about how you think about MNAV premium and running the ELOC more broadly?
Yeah, sure. So it's something that we actually talk about a lot internally, and are evolving our thinking here over time. But I think our core tenet is that 1x is not really the anchor, because we believe that we should be valued at greater than 1x. And so we, don't want to be selling stock when we're, below where we think our value is. Or maybe only selling a tiny bit, for various purposes. But, and so, kind of we are watching the market and how the market are pricing NAVs, and also thinking about our stage in the cycle and kind of coming up with a number on the ELOC that we should be selling. The reason we haven't given guidance, like MicroStrategy recently gave, is that we don't really want to box ourselves in. So there might be a market where we think that, we should be valued a lot higher, at which case we would lay off running the ELOC at a number that, is much higher than, say, a number at a different point in time. Maybe it's in a bear market or something where we think it becomes attractive to sell stock. So even though selling stock at, let's call it a 1.01x NAV would technically be accretive and growing SOL per share, we're selling our own stock and we think that, hey, we should be valued at more than, 1.01x NAV. So I know it's like a little bit of a cop-out answer. And it's partly because we just don't think we can draw a line in the sand yet of saying like, this is the NAV premium that we should trade at. It would be akin to, you going and asking, or someone going and asking, Jensen Huang, like, hey, what should the PE of NVIDIA be? And, he's obviously, maybe he's got some thoughts, but like it's changing over time. And ultimately the market is out there. The entire market, Mr. Market, is deciding what the NAV should be. And so we'll have our views, and sometimes we think the market is wrong. And most of the time, the market is, ultimately the market's always right? In the long term. So I know, again, a bit of a cop-out answer, but this is just some of the thinking that we have. And at some point, maybe we release some guidance, with some wide bands that give us some leeway. But we've not like entirely settled on like, hey, yes, our value should be, XYZ NAV, and anything above that, we're going to run the ELOC hard, and anything below that, we're not going to run it at all, because it's a bit of a moving target.
Moving target indeed. Thanks for the answer, guys. And yeah, of course, thanks for the question on this one too, for the individual that submitted it. As mentioned, I think that this was an important question to answer, and hopefully, again, it cleared out some confusion for folks in the audience and people listening in the future. Just jumping right in. Yep, go ahead.
Maybe, one last piece here. And this is not maybe related directly to the question, and maybe goes a little bit back to the price question as well. But I think one thing that kind of sets us apart as a treasury strategy relative to any other treasury strategy, including MicroStrategy, is the concentration of stock ownership amongst the management team. So Joseph and I, DK, John, Pete, even Marco on the board, we are founders. We're not managers that were brought in and we have some kind of, yeah, sure, we got equity bonuses or equity options as our part of our quote management package. But the primary way that we make money here, especially Joseph and I, is in our initial equity from buying the company. We bought at the initial outset 44% of the company. And so when we talk about shareholder alignment here, there's, other teams, they are managers. I know Saylor, famously sells his equity grants and buys Bitcoin with it, which is fine. They can do what they want. But we are locked in as founders here, as shareholders here, very large, shareholders. Joseph and I are I think the two single largest shareholders individually. And so when, we see the price moving around, we think about NAV valuation, think about running the ELOC, all these things. We come at it from the lens of everybody else here, all the shareholders. And, believe me when I say the price moving up and down is affecting our wealth more than, pretty much anyone else. And so we are hyper-focused on making sure this thing succeeds because we have, a lot at risk here, a lot to lose. We're not just here for the salary or some bonus or something like that. Those things are nice, of course, but we're founders here first and foremost.
And nobody has sold a share.
Yeah, great point. Nobody sold a share, and we are restricted from doing so for a little while. But I think about hey, when would I sell? And it's well, shit. If I sold, then I'm probably not going to be able to buy it back at that same level. So I don't know why I'd ever sell. There might be reasons to sell a little bit or something, but I'm a long-term believer here and plan to be a multi-decade founder and operator of this business.
No one sold a single share, and everyone on the team is looking forward to steering the ship through the bear market. I'm personally...
Nice job, Pete.
I am a hot take. I actually do. I'm a bit of a masochist outside of crypto. I'm looking forward to the bear market. I think, as Joseph has said, it does really separate the haves from have-nots, or the future outperformers, and so I like the struggle of the bear market. And I also say that part joking but part serious. I think everyone on the team here is really committed for the long haul. We talk about even in the bull market what we're planning on to do through the bear market to continue pushing forward. But that's enough of that. I'll shut up. Moving on to the next question, guys. Where do we think we are in the crypto cycle right now? Speaking of bear market.
The multi-trillion-dollar question.
Joseph should give his thoughts on this. He was looking at shape of this cycle versus prior cycles.
Oh, geez. Yeah, but it's okay to be wrong in front of you guys. Yeah. Okay, the way I was looking at the cycle when we were talking about it earlier today, I think this one, it depends on how you measure it, I guess, but I think this one's already longer than the last one. But I don't know. I don't think it's over for sure. I think we got a ways to go. And I think there's probably going to be this is like risky, man. To put this stuff on the record.
Not financial advice. Do your own research. All views are about crypto market cap and are Joseph's views only. Go ahead.
There you go. Thanks, buddy. Yeah, I think rates are going to come down. I think they're going to keep coming down after they start coming down. I think there's going to be like a concerted effort to monetize the debt. I think this is kind of up only for crypto, well, Bitcoin in particular, and the other assets get kind of brought along with it. I think that's what we're looking at over the, next 18 months kind of thing. But I'm not convinced that it's like, real growth. It's just inflation. Number go up, fake number go up, fiat number go up. And I'm not really sure how that plays out, but we talk about it all the time. Were you looking for something in particular? Sorry, from what I said earlier.
No, I think that was exactly what I was looking for. Parker, you were going to add something?
Yeah, I guess I maybe have like a slightly more bearish stance in that I think we are potentially past the halfway point where the maybe bullish and bearish catalysts are becoming more balanced. Whereas, let's call it 6 to 9 months ago, certainly like right after the election, the catalyst seemed like overwhelmingly bullish, right? There was like, hey, there's going to be all this change, all this removal of, draconian, basically assault against the crypto industry and all this positive stuff. Now we're starting to see a bunch of that come to fruition, which is amazing. But I think, can we get that same order of magnitude positive improvements beyond, that same order from what we've already had? That'd be, in my view, a tall order. At the same time, I think there's potentially some additional headwinds, mostly just from like where we are in the cycle, both in equity markets and in crypto markets. Now, one of the good things, I do think that Bitcoin in particular, but crypto now across the board, because of that, is firmly a macro asset. So I don't really see a scenario where equities are up 10% and Bitcoin's down 30%, and then, Solana's down 50, whatever. I think as go risk assets, as go equities, so goes crypto. And so to the extent that, equity markets are effectively a barometer for the success of, the president and his party in general, I think, what was it? Clinton famously said, "It's the economy, stupid." Well, someone now could say it's the stock market, stupid. Unfortunately, because we know that the economy and the stock market are not the same. But I think it's a lot easier to measure the stock market than it is to measure the economy. And clearly, there's an effort, and maybe has always been an effort, to massage the economy numbers. So with that aside, I think the stock market is clearly in focus, and I think crypto is very much tethered to that. And so to the extent that any administration is trying to pump the stock market, I think it's now pumping crypto. And that's always been the case to a degree, but the idiosyncratic factors, I think, could sometimes outweigh the macro factors. But now I think, barring, and I'm probably going to eat my words, but barring some crazy thing happening, like, I don't know, Coinbase blowing up or something, I think the macro factors will outweigh the idiosyncratic factors. And therefore, we're all like, macro hedge fund guys now, and we just have to predict where like risk assets are going, which in some ways is easier, right, than trying to predict these black swan idiosyncratic things popping up. So I don't know. It's kind of how I think about it.
The macro stuff is interesting, right? On full credit to, I was chatting with a buddy about this earlier. You guys all know him, the Margin Man on Twitter. If Powell comes out tomorrow and says we're cutting rates, right? It's not bullish. People are going to freak out and say we're behind the curve. And then obviously if he, doesn't cut rates in September, people are also going to be pissed. Stuff sells off because there's an embedded expectation there. So it'll be interesting to see how he strikes the balance. One of the things I'm paying attention to, since Parker mentioned that, crypto and risk assets are, generally should have some movement in tandem or be correlated, is I'm paying close attention to tech. One of the proxies I'm actually watching is capital expenditures across the big hyperscalers. So, Microsoft is pressing hard on CapEx. I think they're going to be at a $120 billion run rate next quarter. Zuckerberg is spending $100 billion in CapEx next year. It'll be just around the $70 billion mark this year. Google's spending $100 billion next year. Amazon needs to spend out of their mind to take back share from Microsoft and Google. So you have all this stuff that is like going to flow through to the infrastructure winners on the tech side of things. And as long as the party at NVIDIA and AMD can keep going, and obviously, like more broadly, the NASDAQ will keep working. So, if that, frankly, that just shows no signs of slowing. So, valuations are largely reflective of that, but, I think these things tend to last a bit longer than folks maybe anticipate, and valuation shorts on their own never really work.
Great. Thanks for the answers, guys. I kind of prefaced the question by saying we had our macro team sync earlier this morning, and hopefully, from the answers given, the audience feels like we are having really good, productive conversations, and it's clear that, we're thinking about all sorts of things, including what the macro environment looks like and how that could impact our business. So, great answers all the way around.
Mr. Pete, I would love to hear yours as the VP of Research and on-chain guru and watcher here. What are your thoughts?
Oh man, now I'm put on the spot. I'll keep it super brief because I do agree with a lot of the sentiment here. But I guess just starting micro and going macro, I think the tailwinds for crypto going forward are going to be money supply increase, Fed rate cuts, maybe some more bullish regulation or institutional adoption. And, I think for all of that to persist or to come to fruition, we do need to see inflation in the States, more importantly, come down. We want to see the labor market continue to soften. There was a big revision that came out last week for the jobs numbers. Seems to suggest, whether it's true or not, that the labor market isn't as strong as it once was. So, as DK kind of talked about here, it sounds like the Fed, Powell, might be finally in a position where he can finally capitulate to Trump's demands and lower rates. And so I think if that happens, it could be good. And nonetheless, I think that there are a number of different bullish tailwinds to not neglect, but I think it is also just a little nerve-wracking to see equity valuations or just the equity indexes at all-time high or near all-time highs, and Bitcoin's had a big run. The alts, select number of alts have done really well, but I don't think that's necessarily any reason to run for the exit quite yet. I still think that my bias is that things are a bullish setup for now, for sure. So time will tell. Cool. So I know we've got a few more questions here. We'll try and get through these quickly as possible, just because I know we want to be mindful of audience members' time. Guys, are we planning to stick to a weekly buy cadence going forward? That's something that we've done as of late. I know Parker did a Twitter poll. General thoughts here.
Yeah, I think, we haven't committed formally to it. I think, I know I said, quote, weekly it is, but I think we generally want to try to do weekly. I don't think we would do more frequently than weekly, like twice a week. But there might be times where, maybe the number to announce isn't that big. And so we just would maybe wait a week and maybe do it selectively once every 2 weeks. But I think generally speaking, we'll probably try to do it weekly and maybe move the day around a little bit here and there. But yeah, we'll try to, stick to that kind of cadence. And maybe at some point we tighten it up a little bit more. But for now, I think that seems fairly reasonable.
Can we talk about going the other way, right? Like, what if we miss a week or something, right? Like, is the market going to freak out about that? There's certainly going to be times when, we can't buy because we can't fundraise. And I don't know, I guess there should be some nuance or disclaimer or something there.
Yeah, I completely agree. There might be times where, hey, the NAV multiple is not very attractive, so we're not really running the ELOC very hard. And so, we could announce what the organic growth was, or, hey, we bought, 1,000 SOL or something, but is that interesting to the market? Is that even worth a headline? Maybe it is. There's information there like, hey, they didn't really run the ELOC very hard this past week. But yeah, we just want to, maintain the flexibility to maybe not announce certain weeks if we haven't, bought a bunch, or there also might be certain situations where we can't announce, certain activities. Maybe it's like a fundraise, and if we're working with a bank, and this is entirely hypothetical, but maybe we're working with a bank and their counsel is like, hey, we don't want you to announce any kind of market moving news. So please stop announcing buys, for example. So, there are situations, different types of situations where we might not be able to announce, but I think generally speaking, we'll try to do it, roughly weekly.
Cool. Moving on to the next one. Do we have a leverage target?
We've discussed internally, and we have a rough number, especially in the context of thinking about the bear market coming at some point. However, I think we haven't decided to publish a specific number. Hey, 30% debt to assets, or 50%, or 10%, whatever it is. We have not decided to do that, and that's partly for two reasons. One, we don't really want to paint ourselves into a box, so there might be situations where we want to go higher, might be one of the situations where we want to go lower, and we don't want to have to be constantly moving the number around. But two, I think the other point here is that, quote, debt comes in so many different packages that it's tough to put a single number. So I'll give you an example. We could borrow a bunch of dollars collateralized by our SOL, and that would be considered debt. And the problem is there, if the price of SOL goes down enough, then we get a margin call and all more SOL gets deleted. That's one form of debt. And we want that debt to be, pretty close to zero, right? Like that margin callable, like, hey, we're borrowing dollars, and if the price of SOL tanks, like our balance sheet is getting deleted. That would be like a catastrophe, worst case scenario. So like, let's not do that. Then another type of debt would be, I'll use a real example, a 5-year unsecured convertible bond, where, coupons aren't too bad on that, 5.5%. But if the price of SOL goes to $1, but we have enough cash, for example, or revenue to pay the coupons, then those investors have no right to the balance sheet. They can't force us to sell the SOL at $1. And if the price of SOL goes up, or actually technically directly speaking, if the price of the stock goes up above the convert price, then they can convert. We can actually even force them to convert once the provision there is met in terms of time. And so that debt is far less risky than the secured margin loan, essentially. So then I'll give another like hypothetical example. So MicroStrategy's been doing all of these preferred offerings. And these preferred offerings, they are perpetual, so there's no maturity date. A lot of them are non-cumulative, meaning they can stop paying the coupon and there's no repercussions, at least for a little bit of time. They have time to like turn them back on at some point. And so that, maybe is like quasi debt, but that's far less, that's even a lot less risky than the convertible, which is less risky than the margin. And so setting a specific target across the board for debt becomes pretty difficult when you think about these different instruments. So we've chosen right now to take the path of, we're going to monitor it. We're going to be, selective about how we take on debt and prudent about how we take on on debt, especially in view of the bear market, and thinking about how can we, survive and much better thrive during the bear market, and then kind of factor that all into coming up with different levels of debt that we want to take based on, different types of instruments. Again, avoiding that secured debt like the plague. So it's kind of a thought there, how we think about it. Maybe at some point in the future, we'll give more formal guidance on targets, but for now we're, continuing to evolve our thinking.
Okay. That was awesome. How about the SOL denominated stuff? Can you talk about that for a second?
Sure. So there are some situations, and we've done a few, we've done 2 of these now. I think we've announced that we've done 2. We've done at least 1, I'll just say that. Of these where we borrow SOL, collateralized by SOL. You say, like, why would you do that? That seems dumb. Well, we can, because we're able to buy the discounted locked SOL, as long as we can borrow SOL at a rate that's lower than the discounted locked SOL, then we can actually capture a spread there. And so we've done that selectively, putting up the whole balance sheet as collateral for that. But we can put up some of the locked SOL as collateral to then borrow some SOL, some liquid SOL, to then roll back into more locked SOL. So there's no margin risk, there's no liquidation risk, right? There's no basis, SOL against SOL. It's you can't get liquidated. And so then the quote default risk is just like if we can't pay the interest or pay back the SOL, which we already have SOL, so it's kind of a, basically it can't be defaulted on piece of debt. So that is some debt that we have, but it's again kind of this just like margin trade, if you will, and it's not a huge position. I don't know, Joseph, if you had anything else in mind.
Yeah, no, that's good. Yeah, so I brought this up because you're going through all these kind of examples, and I imagine, many of the listeners are familiar with a number of the ways that MicroStrategy has raised money. But I think there's actually many other instruments out there, and some of them that could be created, where, and maybe they're they're Sol specific or more crypto native. And I just say, we don't want to rule this stuff out. If we find some interesting way that's basically the lowest cost of capital that we can get, or a lower cost of capital way to grow the balance sheet. So just want to maintain the flexibility, while continuing to prepare for an upcoming bear market, which, like we said before, we've been through a bunch of them.
All right. Getting down to the last question here, guys. I actually really enjoy this one. Would love to hear from everyone on the team too. What do we view as our differentiators? Who wants to go first?
I'll go first. And I'll just say one, let others add other things. Team is, I think, a very important differentiator. Joseph's background, Chief Strategy Officer at Kraken, CEO of the first Canadian Bitcoin exchange back in 2013. I was at Kraken for 6.5 years, most recently as a Director of Engineering. DK head of strategy. Pete ran Kraken Intelligence. We've got other folks on the team with a pretty storied pedigree. Marco on the board, former Chief Legal Officer at Kraken. I think the team is a key differentiator, and it's a pretty exciting part of our story.
Yeah, you stole my answer. The team is going to matter. The team is going to matter a lot, especially if we're sticking with our mantra here that the winners are going to be determined in the bear. I mean, we are all taking a very long-term view on this, and I think, as I've mentioned to others before, having acquired the scars that we have through various bear markets in the past, I think equips us really well going forward to keep growing SOL per share. I guess the other thing I'd add, of course, is our obsession with that singular KPI, SOL per share. That's an important element to this story that I don't think a lot of other treasury vehicles in the space have really put front and center the way we have.
Yeah. Okay. I think longer term, there's probably a few things here. So one of the things that differentiates MicroStrategy from the other vehicles is the liquidity in the stock, and the liquidity in the options, and the very low cost of borrow to short the stock, and the funds that have built themselves based on MicroStrategy, like leveraged MicroStrategy stock or kind of yield on MicroStrategy stock. And this becomes a network effect for that company, right? And a network effect, this is like one of the ways to achieve, kind of true differentiation that's very hard to break, and coming from the exchange business, kind of see this every day where, liquidity kind of begets liquidity. And so I bring this up because I think longer term, this is like where all of these companies are trying to go. That's where we're trying to go. So yes, we have kind of a list of items that we think differentiate us from other businesses. The team, we run our own validator infrastructure. Our staking yield is probably higher than everybody else's staking yield in the treasury space. So we have a technical advantage. We're also coming out of the team piece, I think, are probably more likely to, weather bear markets or have better planning than a bunch of these other companies. These are differentiators, but I think like ultimately the long-term one that must be achieved is the liquidity one. And maybe I'm like going a little too crazy on this one, but so all of these become like reinforcing on each other, the liquidity pieces. Low cost to borrow facilitates convertible debt fundraising. Option liquidity probably, facilitates the same thing. It makes it easier to raise money, basically. More volume and liquidity in the stock makes it easier to raise money with an ATM or an ELOC. And so these sort of like multiply on each other, and is one of the reasons that MicroStrategy is kind of dominant in Bitcoin Treasury, and also the reason that we, or one of the reasons that we said, okay, we need to, not work on Bitcoin, even though we love Bitcoin. We also love Solana. It's because MicroStrategy is there. So I think ultimately the long-term, kind of area to focus on is driving liquidity to the stock.
Great answers. I'll close out or round it out by I guess I'll cheat a little bit here. I got two answers real quick. I think innovation. We're not. I think there's a lot of people coming to market who are they're under the impression that they can just acquire this vehicle, change the strategy, raise some capital from the market, rinse and repeat, and they're on their way to the moon. I think as more and more of these vehicles come to market, that strategy will only increasingly become less viable and less profitable. And so, that's something that I think the team really knew even all the way back in April, which was, I think, in many ways the start of a lot of this. And so, whether it's the validator partnerships or the validator operations, the LST, the tokenized stock, the franchise model, and announcement that we made. There's a whole lot of other stuff too behind the doors that we're jamming on day and night, even over the weekends, that obviously can't kind of talk about. But taking a look around the room, I'd like to say that I think that we're super, super innovative, and I think that continuing to push on that front will help us stand out from peers and perform better over the long term. And then the last one for me, I think passion. I think this is bleeds a little bit into the team, but again, we're not a team of folks who just said, oh, this is a cool opportunity to come to market and make some quick cash. I mean, we see there's opportunity, of course, but we fundamentally believe in Solana. We're all enthusiasts. We all, spend an absurd amount of hours during the weekday and even on the weekends, and we're talking to each other back and forth in Slack all the time, and it's just, you can tell it's not only just a team of super competent and capable individuals with no ego, which I'd like to add, but a team of folks that really, really are passionate about what we're doing, and I personally find that super enjoyable, and I believe that's ultimately is what moves the needles for companies over the long haul. So I did want to just drive home those 2 points. Guys, I think we're at our limit here. We got through 10 questions. Thanks everyone in the audience for attending and submitting your questions. Sorry if we weren't able to get to all of them. Like I said, we'll be doing this on a monthly basis going forward. So if we didn't get to it this time around, please be sure to submit it next time around. We'll do our best to get to all the questions. Guys, I don't know if you have any closing remarks. If so, feel free.
Yeah. Thanks, Pete, for putting this together. Appreciate it, and for hanging out. Thanks everybody for being here, and we know the stock price has been down recently, but appreciate y'all sticking with us and coming out to listen.
Yeah, I guess I'd just echo that sentiment that Joseph said about the appreciation, and also I'm sure many of you guys are, but tell your friends and family, educate folks on what we're trying to do here. And we did just add a new research tab on our website. So we got the Cantor Research Report there. we'll be adding other ones as they come out. I believe Craig Hallam actually initiated on us today, which is kind of cool. Like those guys a lot. But there's also an opportunity for folks, if you want to write an independent research report, you like the story, you kind of want to put down your thoughts. We're happy to also showcase that as well. So we love the views on what we're doing, and love you guys kind of sharing your thoughts with other folks in the community. And we're also happy to be a bit of a microphone if y'all want to put something together, in a bit of a more standard format. So feel free to reach out, and I'm happy to showcase that.